Welcome, John Adams, the Chief Economist with As Good as Gold Australia. Welcome to this interview as part of our series of the As Good as Gold Women. Thank you for your time. There's quite a few things that I'd like to talk to you about, but I guess just as an introduction to you, some of the work that you do at the moment is as an independent forecaster. You're an economist and you're predicting a whole range of things that I think we should start at the very least to listen to your, I guess, your findings, your research and what you're talking about. But in particular, a lot of your work has taken a deep dive into our bastions of power in society, the banking and financial institutions, government, even the media. You know, to tell the world things are not just mainstream or going well, but to actually hear a different perspective. So I'm really pleased and honoured to speak with you. So thanks again for your time. Let's start with the Australian economy. John, what shape are we in right now?
Sure. Well, thank you, Carmel, for in terms of having this discussion. So basically, I've been publicly on the record since 2016, and my concerns go way back before then, talking about the amount of debt in the Australian economy. What we have at the moment is the biggest debt bubble in the history of the country. So we have a domestic debt bubble in terms of household debt, and all of that debt is tied into property. We also have a bubble in net foreign debt. So in net terms, we owe the world $1 trillion, about 57% of gross domestic product. And these two bubbles are completely unsustainable. And anytime you have a big debt bubble in the course of economic history, it always ends up in a catastrophic economic event. So that's why I've been, in the media. I started off with the Daily Telegraph in Sydney in 2016, writing about household debt. And then in 2017 or in 2018, I wrote a series of columns for news.com. And we had this theme of, this coming crisis, what I call economic Armageddon. So the economy is, completely in bad shape. Just to give you an example, so 10 years ago, the Irish economy pancaked, it collapsed. The housing prices collapsed 40%. The banks nearly went bust. And 10 years on, a whole host of people in Ireland are still suffering from those conditions. Well, our debt bubble, property bubble, is not as extreme as Ireland, but it is very close. So there's a whole host of metrics we could go through to show that where we are today, we are substantially worse off when compared to the Americans before the global financial crisis, and obviously they had the subprime crisis, but we're very close to Ireland. And my concern has been there is no honest brokers in the media, in government, being level with the Australian people, particularly in terms of women, and saying, well, this is the state of the economy. Here are the risks that you face. Take prudent action. Otherwise, you could face catastrophic economic loss. And obviously with that loss comes massive social implications. And women tend to bear particular forms of that economic and social costs that are worthwhile talking about today.
Absolutely, and the burden psychologically, emotionally is substantial. I'll touch on that in a moment, but just give me a snapshot. Tell me about your forecasting for the next 3 to 5 years. What is your prediction from a global perspective?
Sure. So we have the biggest debt bubble in Australian history, but also when you look at the world economy. So global debt is at least $85 trillion more than October 2007. So global debt is more than $250 trillion, $250 billion. This is the biggest quantum of global debt, basically in the history of the world. And so it seems to me that we are headed towards a catastrophic event, probably in the next 12 to 24 months.
Not 3 to 5 years? You're actually predicting it to come closer?
Yes. So it's likely we're starting to see some of the beginning signs of things starting to unravel in Australia, I mean, we've in terms of the property market starting to fall, new car sales have started to tank, retail figures have started to tank, but also you're starting to see those sort of behaviours in Canada as well. In terms of China, you're starting to see things starting to unravel in parts of the property sector, the auto sector, and so there's a lot of risks around the world. And to be honest, my basic scenario has been, because this is what has happened in Australian history, is we have this should be right attitude. We become complacent. Something blows up overseas. We're not ready for that event, and we get swept right through it. So this is why I've been writing about this sort of economic Armageddon. I've been talking, in publicly, talking to the media, talking to members of federal parliament about these issues. But to be honest, I mean, the other potential scenario that may play out is that rather than being, the second or third domino that may fall, there is a case to be made at the moment that with property prices tanking, I mean, if this continues to unravel, we could potentially be the first domino in the world to fall. And it may not be that the overseas economy sort of takes us under. We may take the world under. I've been on the phone with members of parliament. I've been on the phone with economists for the last 3 or 4 days, talking about what's happening in the Australian economy at the moment. And there is a lot of concern that what we're seeing now with the unraveling of property prices, the unraveling of people losing their jobs in the construction sector, the retail sector, consumer confidence. Consumer confidence is down. It seems to me that things are unraveling quite quickly, and the question is, well, can the situation be stabilised in this country? So even if it can be stabilised in terms of Australia over the next 6 to 9 months, we still have this global debt bubble that will face a day of reckoning. So in one form or another, either we will collapse from within, or we will suffer some horrific economic loss coming from overseas. And my fear is that millions of Australians are both unaware and unprepared.
I know you do a lot of work with Martin North, and recently he was on a Sunrise morning program, and he talked about Australia, with the potential for Australia to collapse into a recession, saying that there's 5 steps in the recession process and we're at step number 2. Did you happen to see that, or is that part of the thinking that you have as well?
Yeah. So I did see that interview. Martin North and I do a lot of work together. We do a lot of shows on YouTube. We have slightly different economic models and financial forecasts as to how this may play out. We are rapidly. Property prices continue to fall. There are all sorts of indicators that people are losing confidence, but also the intention to buy property seems to be falling away quite quickly. And when you look at the intention of buying, you look at consumer confidence, you look at mortgage lending data, it all points to. So you look at nationwide, property prices have fallen 6%. Sydney prices have fallen 13%, and Melbourne prices have fallen about 9%.
So what was nationally? What's the fall?
6% nationally.
Yeah. Mm-hmm.
So obviously the falls are heavily concentrated in Sydney and Melbourne in particular in the last 12 months. And all of the data indicates that we're going to see further falls at least for the next 9 months. And those falls could be quite sharp. And then the question is, well, if you think about behavioral economics, when people, you may have a few people concerned, but then once you start to get more people concerned, it could unravel into a panic, and a panic could lead to a stampede. And if you see a stampede and people are rushing towards the door, the question is, can anyone stop that? Or if everyone's going to sort of stop buying property and sort of put their property on the market, it could lead to a sharp unraveling of property prices. And then obviously that leads to all sorts of problems around employment, the sustainability of people paying their mortgages, and we could go into a systemic crisis.
Interesting that you mentioned the word fear, because fear is tied into the emotions we have around money, and we cannot kid ourselves how important this is. And just on that, I know that recently there was an article that you talked about in the Sydney Morning Herald, and it was the economic and social horrors of postcode 2570. Now, the article didn't focus purely on the postcode as an isolated suburb, which incidentally was Camden South in New South Wales. But the very real issue was uncovered, and that was that mortgage stress had a direct correlation on domestic violence as a result of the consequences of, among other things, bad economic policies. So, what's your kind of top-level analysis of that report?
Yes. So in that article, the crime statistics for the New South Wales government has seen a dramatic increase in domestic violence in that particular postcode, which is Camden and Oran Park. And basically, what you have seen is the relevant minister, Prue Goward, was concerned about the spike in domestic violence, went to the local police and asked, well, what do you see in your local community that explains these statistics? And it was the police who said that it was mortgage stress that was causing significant heartache in a whole host of families and households in that particular postcode. So, when I saw the report, I personally hopped on the phone, spoke to some of the leading service providers in that postcode for domestic violence services who talked to the women. Martin North and I looked at the underlying data that basically underpins that postcode, and basically what we found is that mortgage stress, rental stress, negative equity, all of that was in catastrophic sort of territory for that postcode, and you're starting to see the social cost of too much debt and people not being able to pay that debt. I mean, so last year I spoke a lot about, and then a whole host of forums about the social cost of when you get economic policy wrong. And a lot of the concern I've had around that is when the crisis really manifests itself. And so this report in the Sydney Morning Herald I was surprised with, because we haven't seen the crisis come to fruition yet, but we're already starting to see some of the social costs that tend to happen during the crisis, but they were happening before the crisis. So that's obviously a bad sign. And obviously in that case, obviously a lot of women in that postcode are being affected because men, for a whole host of reasons, are not feeling able that they can handle the responsibility of meeting the financial commitments of too much debt.
It's an increasingly distressing situation. I am very passionate about helping women to really look at being educated and informed about their own financial situation. And I am extremely hand-on-heart passionate about helping different types of women, all types of women in Australia, to hopefully allow them to see a little less stress financially, which then has repercussions of feeling better about themselves, better health, better confidence. It really has such a ripple effect. We cannot disconnect the value of how having being on top of your finances crosses over spiritual, emotional, psychological, so many different facets that we really have to recognise, honour and start to do something about. Having said that, with my work around the female clients that we look to helping with As Good as Gold women, I talk to quite a number of different types of women, older, younger, different age groups, different socioeconomic backgrounds, cultural backgrounds. And what I'm finding is that there's an emotional and psychological difference, if you like, between men and women that I wanted to explore a little more about, from maybe your understanding of, why women are not investing so much or not taking risks, and what you find that psychologically is something that maybe you're not understanding or, I can shed light on.
So when we look at sort of women in the current economy, we see that, so I'm basing this off some independent data that Martin North has, because he runs household surveys across 52,000 households. And what his data has been able to illuminate is that where there are female-only households or households where women are the sort of primary earner or breadwinner, you tend to see things like, these households have lower wealth, lower incomes than other households. You also see that women tend to be more conservative when it comes to how they allocate their money, how they understand risk. You tend to see that some of these women tend to be in dire financial circumstances because a lot of times, particularly with single mothers, they have dependents and they'll have lower levels of income to support those children. And, there's all sorts of problems in the child support sector as well.
Yes, and women don't earn the equal pay either. That's obviously another issue.
Yes. And one of the more alarming things that Martin's data has picked up in the last few months is we've seen women, there's been a pickup in payday loans. So these short-term loans with high levels of interest, there are more women who are seeking these short-term advances to cover their bills. And anytime, it doesn't matter if you're male or female, anytime when you're in debt and you're struggling and you're trying to pile on debt upon debt upon debt, it can easily unravel into a debt spiral, people's financial circumstances could really pancake from that. So I think I think men and women right across the economy. A lot of people do face risk. What you tend to see in terms of economic crisis is so men tend to see higher levels of unemployment when you have a crisis because they tend to be employed in sectors that are more cyclical. For example, like construction.
Yes.
So I think what you'll see is that you will find and obviously we're speaking in terms of on a relative basis. You're going to find women, a lot of women will hopefully be more stable in their employment situation compared to men, but there still will be a lot of disruption economically depending on how the final sort of scenario plays out. And when I wrote for news.com when I wrote for them last year, I basically mapped out 6 scenarios as to how I think this Armageddon sort of thesis plays out. So I think it's important that, and I think you guys spoke about before, it's very important that women sort of try to invest in their education, try to be financially prepared, try to understand where the economic risks really lay, and then obviously try to take action before things unravel and it's too late to actually protect your financial position.
Absolutely. The other very distressing for me factor in Australian society when it comes to our wonderful women is the growing number of women aged 55 plus who are now destitute or becoming destitute. They may have been divorced. The children have, left the nest. They then don't have the home. They don't have investments. Their job prospects are very slim. So this is something that I'm personally very passionate about seeing some resolution around. It's a distressing, disturbing, growing sector in our society.
Yeah, and so one of the things I found the last couple of days was that there was a recent study about suicide rates in Australia, and one of the interesting findings that this study found was that women who are unemployed during a financial crisis tends to have a suicide rate 8 times more than women who are able to keep a job. So when you look at suicide, when you look at, for example, when the Greeks had the sovereign debt crisis in 2012, prostitution increased by 150% in Greece. When you look at in terms of domestic violence, when you look at drug abuse, there are anytime you've got distressing economic conditions. So it's absolutely what you're saying is true that. In the current economy, a lot of women are struggling. A lot of women find it extremely hard to get by. And I think some of the national statistics show that around the cost of living. A lot of women are facing cost of living pressures, which are in a lot of cases unbearable. Mm-hmm. But when this unravels into a more extreme economic scenario, the real horror that a lot of women will face if they're not prepared, if they don't have a sort of support system around them, could be quite catastrophic. And so last year I wrote a piece because news.com wanted me to write them a piece about 10 steps how to prepare for Armageddon. So I did, and rather than just it being a straight financial list, it was more of a holistic list. So it was things like a few financial things, hold good money, like things like gold and silver, get your debts under control, focus on cash flow, read history, because you really don't understand the dimensions of what we may be facing until you read history and try to compare it to what it is today. But it's also things like improve your independence, your self-reliance, being able to do things yourself, having strong personal relationships, embracing spirituality, whatever that spirituality may be. People in economic crisis tend to feel despondent and lose hope. So it is true that no matter what form of religion or spirituality you follow, people do find solace in believing in some sort of higher power. So I pointed that as well. But also, I sort of, the last point was that it's important for both men and women across Australia to be involved in the public policy discussion, to be involved in the political discussion, and obviously, if you think that the establishment, whether it's the government or the banks or the financial press or whoever, are not actually managing your financial affairs and your economic affairs appropriately, that you get involved and try to sway the policy and debate in the right direction.
Absolutely. I like that you ended on the more kind of the public policy, the more community oriented, but I also do a lot of work with As Good as Gold women, interviewing and looking at education, providing information. And what we find is that it's then very personal. So we look at how we grew up as young girls, that we may not have ever been given any financial education, ever any interest in looking after money. I think that's starting to change more so with our younger women. I think the issue of instant gratification that we're looking at in society needs to seriously be addressed. So the whole education around who you are, where does your confidence lie, taking little steps at a time, even if they are smaller risks, like, for example, maybe investing in or purchasing a little bit of gold and silver that is tangible, that is solid and reliable. That obviously I'll talk a little more about that in future. But I think that it's just about opening up your perspective to how you can help yourselves or ourselves and our families. Which then leads me into the big one for 2019 that I really want to ask you is, John, who can women trust?
So I think you consider this question in two ways. Who should you trust and who should you not trust? Now, on the latter question,
right,
who you should not trust is everyone who says that the economy is fine and nothing to worry about, and people like me are doom and gloom agents. All I'm doing is looking at the in terms of the underlying statistics of the Australian economy, looking at other previous times where you've had an economic crisis, and just looking at economic history, and all of this points to it not being, we've got a sick economy, we've got an unsustainable economy, and there are a lot of people struggling with too much debt. Well, ultimately, this Armageddon thesis plays out when the debt becomes unsustainable. So if people lose their jobs and they can't pay their debt, well that's going to really unravel from an economic perspective. The number one, no matter what the politicians and the media say, the number one economic issue in the country is too much debt. Now, we have seen debt. So the debt in this country is still growing. And when I say debt, I'm not talking about government debt. I'm talking about private sector debt. So private sector debt continues to grow. In 2019, it is growing at a slower rate. But we have this giant quantum bubble. And anyone who says that is not a problem, there is no historical precedence to show that this debt bubble will have a soft landing. The International Monetary Fund released a report last week and said that Australia's most likely scenario is a soft landing. Well, when did they say that previously? They said that in 2007 when they released a report on Ireland. And what had happened in Ireland, house prices fell across the country 40%, and the banks nearly went bust.
Right.
And 10 years on, a lot of households are still stuck with mortgages that they can't get out of.
Yeah.
So I think that, and again, people or women don't have to necessarily listen to me. I think people should be looking for a whole host of opinions. Consider the mainstream view, consider alternative views. Try to understand and study the underlying arguments of both cases. And then if you think that the non-mainstream economists or people who with an alternative view are making more sense and can actually argue a more rational case, well, I would encourage women across the country to trust those voices, because people like me, why have I been saying these things for the last 3 years? I think I've got a civic duty. I'm a professional economist, but knowing that I know that men and women are in trouble and are in danger of seeing some very bad things come forward, I've felt that I had a civic obligation to try to voice these concerns, and that's what started this whole journey for me and sort of talking about these things publicly. So I seek no sort of personal benefit from putting these warnings out there, and I've received enormous criticism for the things that I've said, and support
from those who also understand what you're saying and also find truth in what you're saying. So we have to look at it that way as well. There's also some benefit too. So in a nutshell, really quick, look deeper into what's being really said. Try and read between the lines. When government, media, the banking, financial institutions really don't take anything for granted. I'm hearing you say that. Really don't just put all your trust and eggs into one basket, so to speak. I'm hearing you, and it's making sense to me. So other than those like yourself, John, who talk about maybe an alternative way and really questioning things on a deeper level, who else can we trust?
I think a lot of it is, try to have trust in yourself. When you sort of see, I think for a lot of people, it's really just what is the eye test when you go to the local barbecue? When you talk to people and people are saying that they have massive debts that they're struggling to pay, or thing is people are, when you talk about instant gratification, well, that instant gratification largely, both men and women in our society at the moment, is being funded by debt. So a lot of that is unsustainable. So when you sort of see a lot of people, behaving in a way that doesn't seem to be that doesn't make financial sense. If your gut or if your eye says that doesn't look right, well, it shouldn't look right. And I think, I think people should be, in terms of trusting themselves, obviously looking for a whole host of different voices, not just in Australia, but overseas. But also have a look at who has a reasonable track record. There are certain people who picked the GFC, who basically warned about it in 2004, 5, 6, and in 2007. There's some Americans, there's some Europeans, and they could see all the writing on the wall. Some of those voices are back out again, saying that we're headed towards another crisis. So people with that sort of track record, who picked it last time, and who can not only say it's happening again, but can explain why it's happening again. And there's a robust explanation for that. I think they're the sort of voices that people should be listening to.
Sure. And look, just to finish on this more higher note in the interview with you, John, obviously I am trusting Gold and Silver. I work with Gold and Silver. I'm part of the As Good as Gold Women. So this is an area that I'm very passionate about. In your opinion, what about Gold and Silver to trust as a savings plan, to trust as an investment for the future? What are your thoughts on that?
Sure. So people across the economy have to understand, how did we get into this position? And how did we do this? Well, we've printed enormous sums of money. We've created a lot of credit in the banking system, and and that's where the source of the debt comes from. Now, historically speaking, what that has done is that has reduced the purchasing power of the Australian dollar. So, for example, if you had like a dollar in, say, the early 90s, well, your ability to buy goods and services in the modern economy, you can buy a lot less compared to what you could back in the early 90s when this economic cycle began after the 91 recession. So yeah, I mean, the reason why people buy gold and silver is, so gold and silver it's not, well, I wouldn't say it's an investment. It's more of a alternative form of money. It's the historical form of money that's been around for 5,000 years.
So you wouldn't say it's great for an investment, but would you agree it could be considered as a savings plan?
Yes. So if you've got money, you've got different options of how to hold that money. You can hold it in physical cash. You can put it in the bank, or you can hold it in terms of gold and silver. And what we know from 5,000 years of history, if you hold cash or if you put it in the bank, that is more riskier. It's going to lose value because of government manipulation with the money supply, and your long-term value of that money, it is well preserved and better preserved if you hold physical gold, physical silver. And obviously, this is something I've said on multiple times publicly. I mean, I've been buying physical silver for myself for about 2.5 years. I mean, As Good as Gold didn't search me out. I approached them. I said, well, I'm doing all this work. I believe in gold and silver. I've been buying it, so we should be working together. And after a few meetings, here I am as their chief economist.
And silver's predicted to skyrocket within the next less than 3 years. In my research, is that something that you could also support?
So the thing is, there's a lot of forecasts around where the value of gold and silver may be priced in, whether US dollars or Australian dollars. What I'm seeing is because we're really getting to a critical point. We've got this big debt bubble, and the economy and the government can do one of two things: either let the debt bubble collapse, and that's going to create a deflationary force throughout the economy, and prices will come down, or they're going to continue to print money, push stimulus to prop the debt bubble up, and basically kick the can down the road and to protect the banks. And everything that I'm listening to from the government, from the Reserve Bank, from the IMF, from overseas institutions like the European Central Bank, the US Federal Reserve, the global force, the global powers that be, will not allow for this debt bubble to blow. They're willing to push interest rates back to zero, quantitative easing, negative interest rates, all sorts of forms of manipulating the money. And your best form of protection with all of these policy maneuvers coming forward is by holding something that's tangible, physical, in your own possession, and that has a long track record of holding value.
John, I think we'll leave it there, because that to me is also inspirational. It's something I believe in, and I really appreciate you saying that. Your insights and your perspective have been very well noted, and hopefully through this interview, through the work we do yourself with As Good as Gold Australia and the work that I do with As Good as Gold Women, hopefully this will allow to encourage some more of our wonderful women to have a look at gold and silver, and even a small amount over time that compounds, to assist them very much so in having a little more security down the track towards their financial freedom. So thank you very much.
Thank you, Camden.